The ending may be in sight, and no, I'm not talking about the film Armageddon. I am, however, talking about the global rate hike cycle as the Fed seems to be nearing its peak. So with another Fed meeting just around the corner and fears of another recession on the horizon, does the smell of a deeper story still loom the street? What's trending with equities as they are on the rise? Could we be in for a Hollywood-style ending? We're going to find out right now here on UBS Trending. Hi, everybody, and welcome to another episode of UBS Trending. I'm your host, Anthony Pastore. I am thrilled to be joined by my guest, Brian Levitt from Invesco. Brian, it's always good to have you here.
Always good to be here.
I've got a lot to get to with you today, and there's so much going on in the markets right now. I couldn't think of a better time than to sit with you. Let's talk about the tightening cycle, which has been, sort of in our midst for quite some time now. But as we said, it seems to be kind of like the most economists, most market strategists like yourself expect the Fed to go one more time in May and then pause for a while. Do you think that's going to happen, and is this time different?
Well, we certainly hope it's going to happen. And if you look at the 6-month percent change in the consumer price index, you're down below 2. So that's a really good sign for investors. And look, this is playing out the way cycles play out. You get a lot of tightening, and this time far more than we ever had in a very short period of time. You get some type of accident, which we've had. The economy slows down, and then ultimately the Fed backs off. So that's what we're moving to. Now, it's I think for investors, it's like an Alfred E. Newman, what me worry, but everybody's worried. Maybe it's the opposite of an Alfred E. Newman, but we're progressing through this as we should be.
I'm surprised we haven't seen a caricature version of Jay Powell with that above his head on some kind of a Time Life cover. But it's interesting, when we talk about Powell and the Fed, there's been some speculation or maybe some talk that they've been sort of behind the eight ball a little bit. Maybe they're starting to catch up. What's your talk? What is your thought on that?
Well, they've made a couple of mistakes. First, and far be it from me to throw shade at them, but there was a couple of mistakes. They left policy too easy during a global pandemic. I mean, they didn't know if the pandemic was going to come back.
True
right?
enough.
So,
there was no precedent set for something like that.
So they left rates too easy. Inflation got out of control, which policy uncertainty creates volatility and drawdowns in markets, which is precisely what we got. Typically, they shift their approach at that moment, but they weren't able to because inflation was still elevated.
Yeah.
And so now that it's coming down, are they tightening too much? Perhaps. We don't know the lagged effects of all of this.
Well, the Fed Governor Chris Waller doesn't think so. I mean, he came out just this past couple of days ago and said that he's like they would continue to tighten as needed. He also said that inflation is still too high, and so my job is not done. What do you think he was talking about there?
Yeah, I think that might be the Fed open mic committee instead of the Fed Open Market Committee. Yeah, use the power of the mic to try and settle things down a little bit. I mean, if the idea of all that's been happening is make us feel less wealthy, not that I ever felt wealthy, but make us feel less able to consume because we got to slow this thing down and bring inflation down. And I think for a lot of us, we do feel less wealthy than we were. But as soon as we start to get the sense that the Fed's going to back off, stocks rally, credit rallies, rates come down, dollar weakens, we start to feel a little bit wealthier.
Yeah.
Right? And so then you use the power of the mic to say, settle down, everyone. We're not done. This is going to go on. And then, things ease a little bit. But they're coming to the end.
It's interesting you should say it that way, like we feel less wealthy. Because when you look at what's going on, even though there's been this kind of steady rally in the S&P, the bears are starting to win. It's almost like to say you're bullish these days is like you're a pariah.
Yeah.
Nobody wants to say they're bullish right now, and more bears are kind of getting in here.
I think saying you're bullish is you almost always feel like a pariah.
Yeah.
Someone told me when I got
Pollyanna-ish, right?
Yeah, when I got into this industry, somebody told me that the pessimists sound smart, the optimists make money. Right? And if you think about the S&P 500, which is positive 3 out of every 4 years since its inception, you are better off being long the market. But the pessimists can paint a really, really good argument. So what are the pessimists saying now? The pessimists are saying you're going to have a recession, earnings are going to get hit, and the market has to retrace these recent gains. Now, you may retrace some of these recent gains as the economy slows, but remember, markets lead the economy. not vice versa. Stock market went down 25% last year. Why? Because it was forecasting now weaker growth, bank accidents, right? And so what is the market thinking about going forward? Lower inflation, easier policy. So yeah, there might be some challenges in here, but history suggests the 1 and 2 years after Fed tightening tend to be very good for markets.
And you know what? I saw you talking about this on Bloomberg TV just recently, and I was really taken by that comment. And I think a lot of people don't realize sometimes you have to look back at history to see, even though this latest round with a COVID pandemic, it's not something that you can say, oh, we've been through that in like 2 cycles before. But there are commonalities here.
There are, and maybe it's a unique pandemic cycle, but it's still playing out precisely how you thought. The market rallied in 2020 before the economy.
That's right.
And everyone's like, how can the market go up if the economy's not doing well? Right? In 2021, boom expansion. Then by last year, the market was forecasting a recession.
Right.
And so I think the critical thing is that markets, and I say this way too much, but markets don't trade on good or bad. Markets trade on whether things are getting better or worse relative to expectation. Last year was one of those rare years where things got worse relative to expectations. Beginning of the year, people thought inflation was transitory, Fed was going to raise rates twice, and Russia wasn't going to go into Ukraine. All 3 of those things ended up being worse relative to expectations. Investors need to ask themselves, over the next year or 2, is this going to be better? Is the inflation story going to be better? Is the policy environment going to be better? Will this economy recover from what the Fed is doing to it right now? In my opinion, the answers to that are yes. People miss the recovery because they focus on it not being good. And, I'm a FOMO guy.
Yeah.
I don't want to miss out on it. I've got that fear of missing out. My wife tells me all the time on Saturday nights, it's okay to miss out. I don't want to miss out. And so,
right.
and I don't want to miss out on ultimately what I believe is going to be a nice few-year market rally in the aftermath of tightening.
Yeah, and for the acronym inept, it's fear of missing out. We'll have to
Fear
put
of
that on the
missing
screen
out.
somewhere.
Yeah.
I love all the acronyms. And FOMO is one of those ones that all the kids know.
Yeah.
I can't believe that I know it. I feel I'm way too old to know those acronyms.
Hey, you know the tea, man. So.
That's right. I got to spill it right here. So let me ask you this question, Brian, as we're wrapping up here. We expect, I know that I think you also expect a mild recession, possibly this year, maybe into early 2024. We do here as well at CIO and UBS. But that being said, what do we expect now? As history said, the next 1 to 2 years look good, but in the maybe 6 months or so, what can investors expect here? Bond market, equity market, what are you thinking here?
I've been using 80-81 as a parallel. Now, it's funny that I'm talking as an expert on 80-81. I was like 4 and 5 years old, but
right.
but I did read about it in textbooks over the years.
College classes really pay off, right?
And I was once in an elevator with Paul Volcker, so I got that going for me.
That's pretty close proximity right there.
A lot taller than I expected, actually. Yeah. And so, in 80, inflation peaked. The Fed raised rates through the end of the year. Market went down 27%, and you did ultimately get a recession. Now, once inflation had peaked, if you look, the market did pretty well over the next year or so. Then you saw the economy slowing down. The market retraced some of it. Never went through the bottom, but retraced some of it. But then did very well once it became clear that the Fed was done and inflation was over. And so ask yourself, if you had invested in 81, were you happy by 85, 86? You certainly were. Did you deal with some volatility ahead of that recession? Sure.
Of course you did.
Of course you did. So it's the matter, it's the old Lincoln line of what do you want now versus what do you want most? And, if you want to be very concerned about, call it the next 5 to 10% move in markets because you don't want to be concerned about that, well, okay. But what do you want most? We all want to grow our assets.
That's right.
And so it goes back to FOMO, right? Can you time any market concern around a recession, or do you want to start thinking about what the next cycle looks like?
That's right. Instant gratification and long-term investing do not live in the same realm. And obviously, we're long-term investors here, and we also think it's time in the market, not timing the market, right? Every economist and market strategist's tagline. So great stuff, Brian. Always good to have you here. Let's get you back in again soon. Great chat. Good to see you.
Anytime.
Great.
Thank you.
And for more information from what we're talking about here at UBS and from our best partners like Invesco, please visit our website, our Insights website at ubs.com/views. Plus, there's lots more content to peruse on our social media channels, specifically our brand new relaunched UBS Trending Instagram channel. There's great content there. Never before seen clips from shows that we're doing with partners like Brian and others, so make sure to check that out. Plus, if you have any questions about your portfolio or anything we spoke about today, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon, everybody.